In Portugal's evolving real estate market, income houses, also known as multifamily or build-to-rent properties, are now a central focus for commercial investors. Backed by resilient market performance, policy shifts, and long-term rental demand, these assets are becoming a cornerstone of stable, yield-driven portfolios. This video outlines why income houses in Portugal are gaining traction, where the top-performing regions are, and what investors need to know before entering the market. Income houses refer to residential properties designed and operated for long-term rental income. In Portugal, they fall under commercial real estate when held for investment purposes. There are three main types: multifamily buildings, entire residential blocks, usually owned and managed by a single investor; mixed-use buildings, combining residential units with commercial space, typically located in urban cores; build-to-rent developments, purpose-built projects designed exclusively for long-term leasing. These assets are evaluated like other commercial properties, using net operating income, capitalization rates, gross rental yields, and occupancy metrics. Portugal's real estate investment volume reached €2.5 billion in 2024, nearly a quarter of that targeted residential income-generating assets. Investor interest is supported by urban population growth in cities like Lisbon, Porto, Braga, and Setúbal; rising foreign residency due to visa programs and lifestyle migration; limited housing supply, especially in the mid-market segment. Rental demand has increased substantially. Average rents rose over 10% in Lisbon and Porto in 2024, with government restrictions reducing short-term rental supply in these markets. Rental yields in Portugal remain attractive by European standards. According to 2024 data, Lisbon offers yields between 5.0% and 6.5%, with median rents at €16.04 per square meter. Porto sees 5.5% to 7.0% yields, with strong growth in suburbs like Meia and Vila Nova de Gaia. Braga and Setúbal provide some of the highest yields, up to 7.5%, along with lower acquisition costs. Cascais and Faro target different profiles. Cascais favors capital preservation. Faro delivers rental growth upside. Secondary cities like Coimbra are also gaining attention due to their university-driven demand and rising rents. Across regions, income houses are delivering a blend of steady cash flow and long-term value appreciation. Regulatory support has played a key role in making Portugal attractive for income housing investments. The More Housing Programme, launched in 2024, allocates over €2 billion toward rental-focused housing initiatives, including subsidies, tax incentives, and urban rehabilitation support. Local governments also offer municipal tax reductions for long-term lease properties. At the same time, short-term rental licensing is being restricted in Lisbon and Porto. This regulatory shift improves income stability and reduces competition in long-term residential markets. Digital nomads and long-stay professionals are reshaping housing demand in Portugal. Cities like Lisbon, Porto, Cascais, and Faro are seeing an influx of remote workers, increasing demand for furnished rentals and managed multifamily properties. Nationally, urban population growth and constrained supply are putting upward pressure on rents. Data from Q4 2024 shows a 9.3% year-over-year increase in median rents across Portugal. This supports long-term performance expectations for income houses. Before entering the market, investors should be aware of key operational and legal considerations. Property management is critical. Partnering with local firms can reduce vacancy risk and ensure compliance. Legal compliance includes lease regulations, licensing classification, and tenant protections. Taxation involves municipal and national obligations, with structuring options through funds or corporate vehicles. Acquisition risk is higher in older buildings, especially in central Lisbon or Porto. Due diligence is essential. Understanding local dynamics, not just macro trends, is essential for execution. Income houses in Portugal offer a compelling opportunity for commercial investors seeking stability, diversification, and yield resilience. With strong rental demand, supportive regulation, and a maturing management ecosystem, Portugal is well positioned as a destination for long-term multifamily investment. For those with the right strategy, the fundamentals are in place. If you're evaluating entry into Portugal's income housing market, connect with a Roca Estate, a local advisory partner who understands the regulatory landscape and off-market dynamics. Visit rocastate.com to learn more.